So as I was saying, question 2, they want us to do the general journal. So this is actually nothing new from what you guys have already seen. I think if they actually ask you general journal, you guys have no excuse, because every question that we've started for learning unit 4 has been with the general journal. I think it's more challenging when they start to ask you do this balance sheet, do the income statement, because you have to remember the structure of this thing, and then you need to say how is it affected by whatever adjustment took place. Okay, but either way you should be fine. So here the first thing that they say is depreciation must be written off on 20% per annum according to the straight line method. Okay, for equipment. Okay, they're saying 25% per annum. And sorry, not for yes, for equipment. Equipment to the value of 30,000 was purchased on 1 February 2021. This purchase of new equipment has been recorded in the accounting books. Okay, so we don't need to record the purchase, but we do need to record the depreciation. So we then say to ourselves, they gave us this 28 February. Our equipment balance is 600,000. They said it was recorded that we purchased, right? So basically, and we purchased this on 1 February. Our year end is, let me start there, is 28 February 2021, isn't? Yes. Okay, so 1 March 2020 is the beginning of our financial year. Okay, then they said we purchased a new equipment for 30,000. Right? So that's obviously just 1 month that we've had this equipment for. Okay? And here they're telling us we had 600,000 worth of equipment, because this is the balance as 28 February 2021. So therefore, the equipment that we had at the beginning is obviously 570,000. Yes, because I'm minusing the new equipment. Does it make sense? At the beginning of the financial year. So we need to calculate depreciation on the old or the other equipment and the new. So the new, we can quickly just get that out the way. 30,000 times, they said, 25% on straight line. Then that was for 1 month, 1 over 12. As you guys calculate that, the other depreciation calculates 570 times 0.25, and we had that for the whole year, so that's 12 over 12. What are our respective depreciation amounts? Will it be? Yeah, that's for the new vehicle. Sorry, the new equipment. 625. Everybody getting that? Okay, and then for the other equipment or the older equipment, 142,500. Okay, so our total equipment should then be 143,125, isn't? Okay. So yeah, I don't know where now we got this 150. But yeah, this should be the amount 143,125. Yeah, this is a straight line, 25%. Yeah, don't know where we got that from. Okay, so the next adjustment is the owner took, oh, sorry, I forgot to mention. You obviously, depreciation is affected, and then obviously accumulated depreciation on equipment is affected. Okay. All right. So that's the first adjustment. Next one, the owner took goods with a cost price of 800 for personal use. The entry was not recorded. Okay, so this is very simple. Remember again, they said ignore that. So obviously this is drawings that's going to be affected. We're going to debit it, and then trading inventory is going to be credited because it's going down, it's decreasing. Okay. Right, and they said no narration, so we're happy with that. The next one, what did they say? According to a physical stock take, what happened with this physical stock take? We have trading inventory of 32,000 and packaging material of 2,000. So we then say, okay, but what was our trading inventory before? It was 35,000. So we need to make an adjustment for the difference to reduce what we have in the books. So we say, okay, we're then obviously reducing our trading inventory, so we're going to credit it. But we know that the other account that's affected whenever we have a discrepancy is your cost of sales. So we're debiting cost of sales, okay? 35,000 minus 32,000 is a 3,000 difference. And then we're crediting trading inventory, okay? Happy with that. Then packaging material we found was 2,000. So we say, oh, but during the year, packaging materials is an expense. So what we're basically saying is this expense of 2,500 is actually less than that because we actually have 2,000 worth of packaging material that we can sell. All right. So what's the account that we debit, and what are we? Well, we're obviously going to credit packaging material to reduce that expense. But what are we going to do with the other account? What is the other account that's affected here? Consumable stores on hand. Okay. Consumables is another expense account. So you need to say consumable stores on hand. Guys, this account is coming. They're going to test you on this in one way, shape, or form. Does that make sense? So make sure that you're comfortable with it. It is coming. Yes? Okay. We have packaging material. We could have had fuel. We could have had stationery. All three of these are expenses, right? Now, we get to the end of the year, we've done a stock take, and we find that we have extra fuel that we have not used. Whenever we account for these, we say, this is an expense. We have incurred an expense. But now that we find these different expense items, we're saying, no. We can sell this for money. So since we can sell it, we then say, no, we then take it to the consumable stores on hand account, okay? And therefore it becomes a current asset. So that's what's happening here. We have 2,000 worth of packaging material. So here now we're saying, okay, consumable stores on hand, guys, is therefore increasing by 2,000. Okay? And your stationery, oh, sorry, your packaging material, which was 2,500 initially, right, needs to decrease by 2,000 Rand as well. Okay, I don't know why I'm typing this out. I shouldn't be actually typing this out. So here you're also going to have R2000 that we're going to credit the packaging material account, which means that if you were in the post adjustment trial balance, your packaging material would now be 500 Rand. Can you see how we've reduced the expense from 2,500 to 500? Because we said we found packaging material worth 2,000, which we can sell. Is it making sense?
So who wouldn't get the difference and put it here?
No.
So you don't make that pre-adjustment.
Remember, we are saying we have 2,000 worth of this thing, which is now a current asset. So the 2000 is actually the adjustment. Can you see that? So the expense that we incurred for packaging materials only how much? Yeah, because this 2000 we can sell and get money. So it can't be an expense, isn't it?
And like you said, remember we did an exercise earlier in the chapter.
Uh-huh.
You said you when you do the difference, you put the difference out like if you're trading deficit or something.
It always depends on the adjustment that you're doing. It's not cut and paste. So for instance, like with trading inventory, can you see we got the difference? Because we're saying, by how much do we need to adjust for trading inventory? We need to bring it down by 3,000. That's why we had to find the difference. Here we're saying, oh, we have 2,000 worth. So the adjustment needs to be worth that, because that whole 2,000 is a current asset that we can sell. So it's always about the context. Yeah. Right. So that was that. Okay. The next one, salaries and wages for March 2021 has already been paid. Again, our financial year that we're interested in, where did I draw that timeline? Is here. So if we paid for March, March is outside of our financial year, isn't? We don't care for March. We must remove March. Okay? So this salaries and wages must decrease by the 1,600 paid. What account is affected? We know salaries is going to decrease, right? By the 1,600. What's the other account that's affected? Prepaid expenses, 100%. Okay? Prepaid expenses. We paid this expense ahead of time. Okay, so there you can see 1,600 prepaid expense. We're debiting it because it's a current asset, and then salaries and wages we are crediting. Right. Is everything all right? Okay. Then the next one, advertising for February has not been paid. Ooh. Since March 2020, the business has been paying a fixed monthly amount to the local newspaper to run an advert. Okay. So it's been paying a fixed amount. That means that we've been paying the same amount every month. Okay. Now the question is, we did not pay for February, isn't it? So how many months have we paid for? 11. Okay. We've been paying for 11 months. But now the question is, how much have we paid thus far? We've paid 2,200. Okay, so 2,200 is for 11 months. So we simply say 2,200 divided by 11 gives you 200. So we now need to account for an expense on advertising worth 200 Rand to get the 12th month, isn't that we haven't paid. In other words, February. Okay, I think I've made the point there. Let's continue. So there you can see advertising, increasing that expense by 200, and then obviously accrued expense or accrued expenses is affected, and that's a current liability. That's why we're crediting. Okay. Right. Then the next one is rent. Rent for March was received in February. Oh, so we received money for March. What's the problem with that? It's not. You're on it. It's not within our financial year. Okay, it's outside. March is outside. So we don't want that. Okay. We want to only reflect the income pertaining to our financial year. So the tenant pays a monthly rental of 1,000 per month. They've made our lives easy. We don't need to do anything fancy here. We just say rent income, we're decreasing it by 1,000, and then income received in advance or advance. I like advanced 1,000 home and dry. Remember, this is also a current liability. Okay. Right. Then the next one. Interest on investment accrued was 1,500. So here they're giving us the amount. It's our job to find which account are we debiting, which one are we crediting, and how much should we be debiting and crediting. So here they told us interest on the investment accrued to 1,500. Interest on the investment. Let's see. Can you see we haven't recorded anything in terms of interest on investment? And we know interest on investment is an income. So we're going to credit interest on investment and debit accrued income. This is money that is owed to us. Then the next one, they say allowance for credit losses must increase by 10% of the existing balance. Existing balance. Why would we increase our allowance for credit losses? Remember, it's a provision, isn't it? So what are we saying about the current economic climate? Is it good? Is it bad? It's bad, because we're basically saying, hey, we need to make a provision for less people to pay us. That would only be something that would be triggered by, hey, we can see either times are already tough, so we're just being proactive, or we have already experienced more credit losses. Okay, anyway, just felt like talking about that there. So they said 10% of the existing. So we need to go and check for the existing allowance for credit losses, and there we see it's 3,000. Can you see that? So 10% of 3,000. So here, can you see we're making an adjustment? We're not creating it. Are we increasing the adjustment or decreasing the adjustment? We're increasing. So allowance for credit losses, yeah, they said increase by the existing. So allowance for credit losses adjustment. What are we doing to that account? Are we debiting or crediting? Allowance for credit losses adjustment. What type of account is allowance for credit losses adjustment? It's a nope. Allowance for credit loss is the asset. I'm going to write it down here. Allowance for credit loss. This is coming. They're going to test you on this one way or another. Is a negative asset. Okay. Then allowance for credit loss adjustment. It's an expense or a income. It can be either or, depending on how we are adjusting. If we adjust downwards, it's an income. If we adjust upwards, like we're doing now, it's a expense. Okay. So here I'm just going to put in brackets, income or expense. Yes, if we were decreasing, it would have been an income. Okay. And yeah, I'll show you something in 2021 as soon as we're done here, where yeah, I'll show you something pertaining to this. Let me not say it now. So allowance for credit losses adjustment, we are debiting because the expense is increasing. For credit loss adjustment, and they said by 10%. So 10% of 3,000 is obviously 300. Okay. And then allowance for credit loss, the negative asset, we are crediting, and we're crediting by 300 as well. Because here we're just adjusting. If we're in the balance sheet or in the income statement, you would write the whole 3,300. Okay. But here we're just adjusting. Okay. Right. Last one, I think. Yes, last one. The owner made a direct deposit in the bank account of 25,000 as additional capital contributions on 28 February. Okay. So this obviously has not been recorded since it's part of additional information. So bank is obviously going to increase by 25,000. And finally, capital is also going to increase by 25,000. And you're done. with your general journal adjustments. Okay, then you go to question 2.2, which I have already put together there for you. And this is why I was saying I love this paper, because they did a good job of assessing things that don't typically come, but also were brought within the realms of unit 3 and 4. So if you didn't have a good understanding of both units, it was a good assessment for you. And if you did, it was a good assessment for you, because obviously you would have shown how much you actually know. So here they say prepare the statement of changes in equity. Okay, guys, this is just obviously finding our new capital balance. So we know at 1 March, if we look at that statement, our capital was 800,000. Here at the beginning, under the balance sheet section, you can see 800,000. Then drawings, whilst we're here, 32,000. And within the question, I think they did say, yeah, assume net profit for the year was calculated and was 45,000. Okay, so we know to get our new capital balance, we simply say opening balance on capital plus your profit or minus your loss plus any capital contributions. Usually you don't have any, you would have recorded it during the year, and then minus your drawings. And then you get your balance as at 28. And how much marks did they ask for this? Okay, I didn't write. Okay, but the total question 2 was 30 marks. Okay, so that, ladies and gentlemen, is your 2019 test 2.